Some of you might be wondering what exactly porting is all about, and some of our clients have even asked us whether it is possible to port their mortgages. So what is porting all about? Before we dive into the video, you're watching Let's Talk Mortgages. I'm your host Pradesh, and today I have with me the mortgage advisor Iftikhar Mohammed. So Ifti, what exactly is this porting? What is it all about?
So when people move houses, right, they can sometimes take their mortgage along with them, and that's known as porting. So for example, let's say you have a 200,000 mortgage, and let's say you're on a good rate. Let's say your current rate is 3% and the going rate is 5%. You might say, hold on a second, if I break this mortgage, I have to pay a penalty. So instead of paying the penalty, you take the mortgage along with you. So if you need a 300,000 mortgage going forward, you have this 200,000 and you top it up with another mortgage. So that's called porting. So you're moving the mortgage along with you. That's what it means.
Right. So I know a couple of years back the rates were at a pretty good level.
Yeah.
We saw rates at around 3%, sometimes even 4%, and 4.5% compared to the rates that we see right now. So let's say I have a mortgage in the background at 3.5%, and I'm looking forward to moving to another house. Can I port my mortgage? Can I still port the mortgage that I have with my current lender at 3.5%? Is it possible?
Usually there is a porting clause in your mortgage offer. So you need to check that first, whether you're allowed to port. So that's the first starting point. Most lenders will allow you to port, so that's not a problem. And like I said before, if you have a rate of 3%, it may make sense for you to move it, but it doesn't work very well always. So yeah, so I'd say look at your contract first, but most lenders today allow you to port. But what the downside is, you're kind of stuck with that same lender. So whatever the rates they offer for that top-up mortgage which I spoke about earlier, you might have to just accept what they give you.
So does that mean that if I top up my mortgage, apart from the outstanding amount I already have with my lender, it would create a different account altogether, or is it a totally separate mortgage? How exactly does it work?
It usually depends on the lender, but usually it creates a second account. So if your mortgage is called number 1, the existing mortgage, you'll have number 2 on top. But usually the problem we have with porting is sometimes the terms don't match. Because for example, let's say you took a 5-year term and you've say finished 1.5 years. Usually lenders won't give you a deal for remaining 1.5 years for the top up. So you might end up with a mortgage with 2 years on the second part of the loan, and you might have a 1.5-year loan on the first part of the loan. So there is something that you need to be mindful of. Yeah.
Okay, so previously you said that I'll be stuck with the same lender because of course it creates 2 accounts. And is it right in understanding the fact that there'll be 2 different deal-ins because each of the accounts would have their own respective interest rates along with that with different deal-ins, right? So is my understanding correct in that way?
Most of the time, yes. Especially if you're going for a fixed deal, you will have 2 different dates that the deal finishes. But if you top it up with a variable deal, right? So let's say, for example, you have 1.5 years to go, and if you take a variable deal, normally those come without a sort of a break clause. So if there is a break clause, but you don't have a penalty, sorry, that's what I meant. So if you take a deal like that, where you have part fixed and then part variable, then you may be okay. But again, it depends on the lenders. But in general, what happens is, if you're on a fixed rate, you're likely to get a fixed rate because not all lenders offer variable rates as well. So quite often you end up with 2 products and 2 different deal end dates, right? That's where you have a practical problem, because you might be stuck with that lender for a bit longer because the 2 deals doesn't sync. So if you are moving at some point to another lender, you might have to pay a penalty on one of the 2 loans.
So depending on the type of mortgage I'm on and my situation, I'll have to kind of calculate the amount of early repayment charges I'll be paying if I choose to stay on a fixed deal while doing a port, isn't it?
Yes, correct. So you'll have to look at how much you pay as a penalty, and then you have to see how much you're going to save in terms of going with a new deal, right? So for example, let's say you're on a 4% deal, and if you break it, let's say there's a 1% penalty, so obviously your rate suddenly becomes like 5%, right? So you might have to do those calculations. It can be a little complicated for a layman, right? Because that's where you have the advisors. They come into the picture, they do the calculations, and they tell you which one works best for you.
So what if I make it very straightforward? Say for example, I move to another house with similar house value as mine, and I'm pretty much happy with the outstanding loan amount that I have, because that's sufficient enough to kind of fund the deposit, or rather fund the house that I want to purchase.
Yeah.
So how straightforward is that? How easy is that, Ifti?
I mean, that's the ideal scenario. So if you're currently enjoying a rate of say 2%, right, which you took say 3 years ago, and the current going rate is 5%, and you're moving a like-for-like mortgage or porting a like-for-like mortgage, that's ideal. But the problem we have is most people are not like that, because a lot of the time people upsize. So if you upsize, then you have a problem, because you always, not always, but most of the time you will have to sort of borrow a little bit more. So that's when the complications come into the picture. But let's look at another scenario. You can even downsize. So then you might not need the loan as much as what you currently have as your port. So in that instance, again, this depends on the bank, how they like to treat you if you're borrowing lower. So they, quite often what happens is they'll tell you, let's say instead of borrowing 200, now you're borrowing say 150. So on the 50, they might want you to pay a early repayment charge. So, but that might still work out. But again, you need to do the maths to see which one works best for you. Quite often, advisors have these calculators with them, so they can calculate this for you. So if you're not sure, always speak to an advisor.
Thank you, Ifti, for that answer. I have a question that has always confused me. So let's say I'm porting my mortgage to my new house, and now there's no mortgage on my current house.
Yeah.
What exactly happens to my current house in case I don't sell it off?
Yeah.
Then of course I understand it's very straightforward. I sell it and then I completely move my mortgage to the new house. But if I decide not to sell it, but rather rent it out, what exactly will happen to my current residence?
Okay, so effectively that's called a let to buy, right? So if you're moving the mortgage across and you have a sort of your current property, obviously there has to be a lender, because otherwise there's a loan on that. So quite often people get a buy to let mortgage. So the way we call it in our world is it's called a let to buy. So you're letting your house to buy this new house. So that's the way we call it.
Understood, Ifti. I think that's quite clear now on that question. Okay, so what is the best time or point to really port a mortgage?
Good question, but a difficult question, because it really depends on the person's circumstances and what you're trying to do. Again, it's down to those calculations. So you need to make sure that you do those calculations properly to see whether it's the best time for you to port, or if not, you may have to get another mortgage. So again, like I said, speak to your advisor. You can speak to us if you want, or even if your bank is happy to do those calculations, get someone who knows to do it for you if you're not sure.
Okay, Ifti, understood. I think that's a lot of valuable information to take away home. I'm going to think about all my circumstances and see if actually porting is the right way for me, and also probably seek a little bit of advice from my mortgage advisor. Of course, I'll come to you if I need some advice, or if any of the viewers that are watching this video, if they have any mortgage brokers, you can contact your advisor or contact your bank, because porting may not be very straightforward as you might think it is. So once again, thank you, Ifti, for all that valuable information. And with that, I'm signing off from Let's Talk Mortgages. Don't forget to smash that like button, subscribe to our YouTube channel for more interesting content like this. And if you have any questions at all, please do leave them down in the comment section below. Until then, once again, it's Pradesh signing off from Let's Talk Mortgages.